G'day everyone, welcome to Aussie Dollar Insights. I'm Aussie Dollar Man, and in this episode we're going to be looking at a review of the market action for the Aussie dollar this week. Then we're going to get to the good stuff. We'll look at the forecast for the week ahead, and we'll look at some dates and prices to watch. Then for those of you on the Gann journey, I've got some more tunnel through the air training for you. Before we get going, a quick disclaimer, this video is designed to be educational in nature only, shouldn't be taken as a recommendation or as trading advice, and I am not a licensed financial advisor, I'm just a trader with 25 years of market experience. So we'll kick off with the Australian dollar review. Here's what happened at the beginning of the week. We saw a massive gap down. I actually dodged a bullet here. You can see this was Friday's close, and the market gapped down 50 ticks on the open on Monday. Now, I had a stop loss below these lows here. I got long on Friday at these lows. The market ran up higher bottom on the 4-hour chart that you can see here and started rallying up there. This happened during the night. So I went to bed. I had a stop loss down here at break even. So I thought I'm safe. It's the FX market. It doesn't gap. This higher bottom I didn't see because I was asleep. But when I woke up, I saw that the higher bottom had formed and then the market had come all the way back down and taken it out. So I knew that if I had been watching this market, I would have moved my stop up and I would have been taken out for a very small profit there. Now, in this case, the market actually rallied for a little bit after breaking that low. And I looked at it and I thought, oh, maybe I'm okay. Maybe the market's still going up. But I made the decision that no, once that low is taken out, this thing is almost certainly going further down. I'm not going to ride my luck on that. I'm just going to take the loss and move on. I did that. And then I'm glad I did, because when you're trading with a 10-point stop loss and the market gaps down 50 points, you're basically at risk. You're putting at risk 5 units of risk. It's like having 5 losses in a row, 1, 2, 3, 4, 5, bang, 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 bang. And that would have been a really big hit. Now, I don't risk a huge percentage of my account. It would have been fine, but it would have been a little bit of a hit. So I did dodge a bullet there by doing the right thing there. It also pays to check the market before it closes early on the Saturday morning if you are an FX trader. And if in any doubt, just close it. And if you need to, get back in on the Monday. So let's have a look at the week. We had our low come in on the 3rd of February, which was the low that I predicted back in the middle of December. You will note, if you have watched that video, the Australian dollar short-term forecast that was published in the middle of December, the first date that I had there for February to watch was the 3rd of February. Now, the eagle-eyed among you will notice that I did have that as a high. As I've explained in previous videos, but I will do again, it does appear that I've missed an inversion there. An inversion doesn't invalidate any of your dates. It just adds an extra date in there, and it flips the polarity of the dates that come after it. So at some point I missed an inversion. I think I know where that is. I won't go into that here, but I think I missed that inversion. So this 3rd of February high just simply becomes a 3rd of February low. Now, as you can see on the 3rd of February, which way was the market running? The market was running down, and we were running heavily down into that 3rd of February low. This is why W.T. Gann started all of his courses with basic swing charting and form reading work, being able to read the market and reading a few different time frames, so a daily, a weekly, a monthly chart, for example, to have an idea of what the market is doing. If you don't have that basic form reading background, it's very, very hard. Even if I was to sit down and give you all the cycle dates, including this cycle and some of the larger cycles and smaller cycles, and you can have all the dates there, but it would be hard for you to trade it without understanding how swing charts work, because sometimes it's very clean and clear and it's the easiest thing in the world, but other times you get sideways periods like this, or you miss an inversion because it's very close. It's on the line between being an inversion, not being an inversion. So you miss that and you're not sure. Well, your swing charts and your form reading will tell you what's going on there. So it's really, really important to know that stuff. I put a video out earlier in the week saying the Aussie dollar has bottomed. I'll reference that a little bit later, but if you've watched that already, this will be a little bit of revision. We had a nice trend line from our September top to our November lower top there. We were tracking below there. We broke above there, and then the low on Monday, the 3rd of February, sat on top of that trend line. So we've got a few things going for the low here. Obviously, the date. And I had a couple of cycles coming in, or 3 cycles coming in on this low, on this date here. So unless there's something wacky going on here, I'm pretty sure that's the low. On top of that, you've got your form reading. It definitely ran down into that low. It hasn't run up into that into a top. That's running down into a low. You've got the trend line, you've got the gap down and the failed push to the downside, followed by the very, very strong push in the other direction. We've now got a weekly swing that has run further than any other weekly swing since September. So, that's showing a good sign of strength. We ran down for 4 months, which is not a bad time frame. We had an anniversary from last year from a half decent low, and it's all in one daily upswing there. But in these few days up, we've retraced a quarter of that whole move down. All right, so it is showing a lot of strength to the upside. I am pretty confident in that low there, if you didn't pick that up from my tone in the video. Let's have a look at the bigger picture on the monthly chart. We still haven't turned up on the monthly chart. This is the February bar there. We would have to take out the high of January there, about 63.30. To say, yes, this monthly swing has officially ended, but based on the form reading, and you have to use form reading if you want to get in early on these big moves. Otherwise, if you wait for that top to be taken out, you're giving up 300-400 points of the move, and it's a pretty big risk on the trade there. We haven't taken that out. On the weekly chart, you can see over here, we've had lower tops, lower bottoms on this market, but we have had that failed run down, as you can see. We just about took out last week's high, and we didn't. Okay, and I'll show you an example on the British pound that did take out last week's high, but it's getting very close there. If we do go up at all this week, we will take that out, and we'll probably take out that next top as well. Now, everything that I've said, the large weekly run up, the strong low, etc., this is all one daily swing up. So a weekly swing up, if this is going to go up on the weekly chart and take out those tops there, it's not going to happen 99% of the time. It won't happen in a single daily upswing there. So whether we continue up here, whether we have a little pullback and then go up, I still think there's more upside here and that we will take that out and that low is very strong. Now, as a trader, do I make calls like this all the time? Yes. Am I confident on them? A lot of them. If I'm not confident, I generally don't make a call, but I am confident in that low, but I'm not silly enough to think that I can never be wrong. The best of the best, in my opinion, was WD Gann, and he had a track record. When he was tracked and audited, his best period was about 92% success rate on his trades. Still means he can be wrong 1 out of 10. Now, I don't put myself on Gann's level, so I have to accept that I will be wrong more than 1 time out of 10. So as a trader, when I am in trades, I have a tight stop loss on, and I will lose 1 unit of risk if I am wrong. So let's say you've got a $10,000 account, you're risking $100 on that. If you're wrong, you lose $100. If you're right, you're making $500, $1,000, $1,500 or more on that trade when you're right. So you're putting the maths in your favor there. But let's have a look at the pounds. For those of you who follow the currencies, you'll notice that the pound and the Aussie dollar, they often follow each other's pattern very, very closely. You can lay over one over top of the other and it will look very similar. The main difference is in the volatility. Sometimes the Aussie will look flat, but the pound will be a bit steeper, which we have seen in this period here a little bit. It hasn't been as sideways as the Aussie dollar. Sometimes one will crash, but the other will just go down gently and vice versa. But the highs and the lows are quite similar there if you do some research on those markets. Well, the pound did actually this week take out its previous weekly top. So it has put in a weekly higher bottom, which means that even though that we haven't had a monthly swing chart turning up yet, so we haven't broken the high of that of January, the weekly chart giving us a higher bottom is a very good indication that that low is actually in now. And I want to throw out a bit of a bonus to you for those of you who are watching and supporting the channel. I'm looking at this market. This is the British pound. We've had a big run down through here. We're now retracing. I do like that as a top. If we see a top forming here around 75%, I think that will be the highest price on the pound for the year. And I think it would be a cracking short trade. Okay, now a fair bit has to happen for us to get up there. And I don't just do my work now and say, oh yeah, 131 at that level, bang, that's a top. I don't have to do any more work now. I would track that. If I was going to trade it, I would track that as you got closer and closer to that level. The market will give you indications. I've pointed you previously a few videos to the book, How to Make Profits in Commodities by WD Gann. Fantastic book, one of Gann's best. And in there, he talks about the range of fluctuations. And people put them on and they say, oh, the market must stop at all of these. But Gann doesn't say that. He says when markets make tops and bottoms around these levels, it shows a change on the time cycle. he's saying when they make tops and bottoms. So keep an eye on that level. If and when the pound gets close there, start looking at your different time frame charts and looking for confirmation. This is a monthly chart. Look at your weekly, your daily, your 4-hourly charts, your 1-hourly chart, and look for that confirmation there. If you start to see it, that's potentially a really good top there. And it's worth watching as well to see if the pound gets there, given that it often, the tops will be around similar dates to the Aussie dollar and the moves will be very similar a lot of the time. It's interesting if that top comes in, well, where's the Aussie dollar at that point? So back over here, as I said, we haven't taken out that top yet, but we are very, very close to it. And it is the largest weekly upswing since September. So it's definitely showing strength. If that's not the low's pretty close for the monthly swing chart. And that's all it is. It's the monthly swing chart low. I don't think it's the yearly low. Could be, but I don't think it's the yearly low. I think there'll be more downside later. And I've spoken about that elsewhere. All right, so moving on, again, with the range of fluctuations here, that's the lesson from How to Make Profits in Commodities. You can see there we spent 4 months, or the Aussie dollar spent 4 months running down. And if you put a ranges resistance card over that range and you break it up into eighths, so 12.5%, 25, 37, 50%, etc., you can see we retraced a quarter of that move in 1, 2, 3, 4 days, whereas it took 4 months to go down. So it's a really strong move up there. As long as we don't retrace more than, or back below, say, that 61.94 level, I'd expect this market to kick on a fair bit. We're either going up into a lower monthly top, or we've got a major low here. But either way, we're going up till now. And as I mentioned in the video earlier in the week, I think the middle of March is the next key point to watch for a bigger picture turn. Those dates that I gave you back in the middle of September, sort of 4 or 5, 6 sometimes dates every month, that's a smaller term cycle. There are bigger picture cycles, such as, that gave us this February turn here. And the next date to watch there would be around the middle of March. So I'm looking at those dates, those monthly dates that I've got, and I'm looking for opportunities to trade long out of there to run up in conjunction with that larger cycle. I talk more about that in the video, the 7 things I check before every trade, if you want to have a look at how 2 cycles work together on a market. And I'll put the links to some of these videos in the description. But looking at this, I would suggest the 75 and 62.5%, the monthly lower top, if that's where we're running up to, I'd say there's a good chance it will hit one of those levels. I am open to 50%. I'm always open to 50%, but I'd say it's probably going to go to one of those two. For those who are new to this stuff, you might look at it and say, well, yeah, it's hit that level. Maybe it's just a coincidence. This was a pretty major low on the way down and had a spike up into that significant top there. That was bang on the halfway point between the top and the bottom there. You've got a top there on the quarter point, and another top here on the quarter point there. The low there, it came down and sat on the 1/8 point of the entire range. And keep in mind, back here, these lines aren't drawn at that point. The market has stopped there, and the eventual low, or what I think is the eventual low, has come in, and that ended up being the halfway point. So there's a question for you if you're new to GAN, you're new to all of this stuff. Did the market know where it was going? I'll leave that for you for food for thought. All right, let's get into the Aussie dollar forecast now. For those who have been watching the news, obviously it's all been bearish. I still have a look every now and then, and I'll just do a quick Google search for the Aussie dollar. No one's calling it up. No one's saying the low is in. Just as when the move started to the downside, it took a while before people started calling the market down. The news will tend to trail the actual market action. It'll take them a little while to cotton on to that. I am pretty clear on my thoughts there, as you saw from the video earlier in the week. Australian dollar has bottomed, so I'm putting my neck out a little bit there with that. There is that caveat, which is I'm a trader. I have a stop loss on if I'm wrong, but I think that there is a good low there. And now we have to work out what's coming next. Before we get to what's coming next, so I had a great question out of that video. It came from CoolCat2514. So thank you very much for your question. I appreciate the comment and the question. The question was, would this mean, if the low is in the Aussie dollar, would this mean that either an RBA rate cut has already been priced in? So if they cut the rates, it's been priced in, the Aussie won't fall any further. Or will it mean there's no rate cut in February? Well, there's a few answers there, and I did start with a reply there. A couple of things that I do want to add to that. firstly, I'm not an economist, so keep that in mind. I don't try and predict will there be a rate cut or no rate cut. I'll speculate from time to time, but I'm more interested in the charts. And on top of that, or I guess underneath that, you could say I'm more interested in the cycles. This is hard for people to accept sometimes, and I don't expect you to just take my word for it. You've got to prove it to yourself. But over time, I think you'll come to realize that it's the cycles that move the market, or the markets move in cycles, and the news will tend to come around to back up that cycle. More often than not, you will see that. So that's my thoughts on that. I'm not an economist. Like economists, I can be wrong, so I may be wrong about that low. Maybe we get a cut and we tank, but the charts are certainly showing a lot of strength there to me, and I'm willing to back the cycles on that. Number two, with announcements, I tend not to trade them as such unless I've got a date coming, and if we take that opportunity to look ahead at the other dates for February that I'm watching, you can see there that after the 3rd of February, you've got the 10th and the 16th of February to watch. Now, I had 10 as a low and 16 as a high. Because the 3rd of February looks like it's come in as a low, I will cross those out, the high, low, and I'll replace those. So we've got low, high, low, high. So the low on the 3rd of February, I think we should run up to the 10th and then down to the 16th, up to the 24th, etc. Okay, so an inversion just adds an extra pivot in there, and it flips the polarity of the forecast dates coming after it. So there were some some March dates as well. They will be flipped in polarity as well. It's not a big deal as a trader. You do miss them from time to time, and you adjust after that, and that's where your swing charts and your form reading really come in. But you can see there that the 16th of February, that's a Sunday. The next RBA date is the 18th of February, so it's within a couple of days there. I will definitely be watching that RBA date because it ties in with one of my forecast dates there. The third thing I'll say is with news, they could cut rates and the markets may fall as expected, but they may just fall into a higher bottom. So for example, let's say we run up from a low into a 10 February high, and then we're starting to fall back a little bit, and then the news comes out, the rates are cut, so the market will drop a little bit, but it could drop into that February low, and it just gives us the low there that we trade out of, and we continue. So they could cut and the market falls. They could cut rates and the markets can rise. Markets do funny things more often than you think. So you don't try and second guess it. Just observe what happens and focus on your charts. They may cut rates and nothing happens. It goes sideways. At the end of the day, as traders, we know that there are risks. That's why we use stop losses to protect us when we're wrong. So moving on there. Here's how I think the market will unfold, or here's what I'm looking at on my charts. I'm expecting a run up. The date is the 10th of February. If it's a strong low, often it will go a little bit further than that date. So we allow a couple of days either side. I'd say the 10th to the 12th of February. Maybe we go up a little bit this week. And then we pull back into a low. Now, Sunday the 16th is the low. That could come in on Friday the 14th. Or if we are still running down, obviously the 18th of February, the RBA announcement will be watched by a lot of people, so that may be one that's worth watching. And then running up there to around that 22nd to the 24th of February as that next date there. I wouldn't worry about these prices. I'm only interested as a trader at the moment in the direction of the market. So during this point here, from the 3rd of February low up to the 10th to 12th of February, I'm looking for long trades to buy and make money as the market goes up. I probably am not that interested unless I can see a really good opportunity with a very low risk to try and play this move down here from the low, or from the top down to the low. But then I'd be looking, if we do run down into a low, looking for a good opportunity to get long for that next run up there. When I'm trading around those dates, I have what I call a 4-1-4 setup on my charts. I've got a 4-hour, a 1-hour, and a 4-minute chart. So you can see here side by side. This is a 4-hour move down here. And that 4-hour move, you can see it's made up of 4 times as many bars on the hourly chart. And while this is all heading down there, the hourly chart is showing a little lower top there and maybe a higher bottom. So if it does turn up there, maybe that's the end of that 4-hour bar. But it's an expanding 4-hour bar. So there's probably going to be more downside after that. Then I'll break that 1-hour bar down into a 4-minute chart. And there's actually a top there, 62.78. That's about this top over here. So this little hourly move down here, you can break that down there on a 4-minute chart. So I want to see the smaller charts. If you try and do this all the time, the small time frame charts, unless you're a really good, patient, calm, emotionless day trader, the 4-minute chart will drive you nuts and you'll be jumping in and out all the time. And it's not good for 99% of traders to watch that all the time. But around your turning dates, this will give you your first indication of a change in trend. So that's what you want to be watching. That's what I'll be watching on the charts. But behind all of this, I'll have my bigger picture work already done, on the weekend or the beginning of the week. And I'll have my cycles, both big and small, worked out on the market. So I'll know if I'm looking for a long trade or a short trade. This is just the last step to look for opportunities to get long on these charts based on how these swings are unfolding. So I have said that a few times. Form reading is so important. In the previous videos that I've done, I've mentioned the two sources I go to for my form reading knowledge. The original is Gann's work, How to Make Profits in Commodities. There's a whole chapter in there on form reading. And then where I learned it all from first was from Safety in the Markets Active Trader Program. Okay. Now, we've got our forecast, we've got our dates and some prices to watch. Just going back to the Aussie dollar, I do think 65 cents is an area to watch for around that 22nd or 24th of February. Around that 64.80 to 65 cent mark, I think will be the first stop there. But I'm thinking it's going to run up into mid-March. So I'm not in any, I'm not worried that it's just going to turn around and stop on the 22nd of Feb. I think that the middle of March will be that next big date to watch. All right, onto the tunnel through the air training now. Last week, we looked at SolarFire Gold, which is a piece of astrology software. If you're new to the channel, Gann did use astrology and astronomy and also numerology. So we do talk about that a little bit. We looked at SolarFire Gold, which is the program that I use for astrology, and we looked at the concept of natal charts. You can check out SolarFire Gold at esotech.com. Alternatively, there's a free program out there. SolarFire costs about $450 Australian. Astrolog is free, and it can do a lot of the same stuff. I don't know if it can do everything, but it can do a lot of the same stuff. So you might want to check that out first. I've used SolarFire Gold for a long time, and I'm very happy with it. There's no subscription. You buy it once, and you own it. I bought mine about 2009, so I've had it for about 15, 16 years. This week, after looking at the natal charts last week, this week we're going to be looking at the ephemeris generator. So you might be wondering, what is an ephemeris? Well, an ephemeris is simply a table of positions of planets or of heavenly bodies. Now, those positions can be geocentric or heliocentric. That should say heliocentric, not of heliocentric. I'll leave it on there. It just shows I'm not perfect. I do make mistakes. Happy to admit that. By the way, expect, with those dates that I've put out, from time to time I will be wrong. There will be a date that'll be hard to trade, or there'll be a date that I've missed an inversion on, as you've seen. So you never ever, no matter who someone is or what kind of a streak they're on in terms of dates, never assume that it's going to be right. You always do your research, look for your trades, and then put a stop loss on. And if you do that, you're protected as a trader. You'll be safe. You'll have a long and happy trading career. Going back to the ephemeris, geocentric or heliocentric. Geocentric positions are where we're standing on the Earth, and if we're looking at geocentric positions, they are the positions as viewed by us here on Earth. Heliocentric positions would be if you were standing on the Sun and taking a reading from the Sun. That's the positions of the planets as they're orbiting the Sun. Geocentric, planets don't orbit the Earth. We used to think they did, but they don't. But they because of that geocentric position, sometimes planets can appear to go backwards. So your geocentric ephemeris, sometimes it'll show you the degrees, the position of the planets, and sometimes it will look like the planet has stopped and then turned around and gone backwards. In reality, the planet's moving forward all the time, and you'll see that on the heliocentric charts. They're always moving forward. But an ephemeris can be geocentric or heliocentric. I use both of them for different cycles. And it's up to you to do your own testing and find out what works on your market. The shortcuts are to find the answers to the actual cycles Gann used in his book, The Tunnel Through the Air. As I said, I use both for different things. You can use the ephemeris to look for aspects between planets as well. That's one thing very common in astrology, in a lot of astrology books. I will use the ephemeris to track the movements of the planets because I'm interested in the distances and how far they've moved between turning points. So how do we set up an ephemeris? In SolarFire Gold, we click on Dynamic and then Ephemeris Generator. And then we have a bunch of information to fill in. So we can put in a start date and end date for our ephemeris and a start and an end time. and you can set the frequency there. I normally use 1 day reading, so I just get the reading for the planets every day. If you're using a faster moving body like Mercury or the moon even, you could do some intraday stuff there, but generally a reading every day is fine. Choose your time zone that you want, heliocentric or geocentric. You can change here. I'd leave it at true node, minutes of arc. I use decimal degrees for the notation because it's easier to work with in Excel if you have that. And then you can do longitude, latitude, right ascension, declination, daily motion, etc. I just have the longitude there. And then the transiting point here, you can tell the software whether to do a list of planets or whether to just pick 1 or 2. You can set that up yourself just by clicking on it. So moving on, let's say we wanted to look at the movements of geocentric Jupiter. We wanted to track that planet. So just Jupiter down here. And I've set the date from 1st of January to the 31st of December, a 30-year window, or actually 31 years, but from 1st of January 2000 to the end of 2030. There's a quick tip when you're counting. You've got to consider the year 2000. That's a whole year of data. And then you've got 1, 2, 3, 4, 5, all the way up to 30. That's 30 years of data, so you've got 31 years there. On my version of SolarFire, it might be a little bit old, but it can do about 45 years, not a bad time frame, of market action there. So if you need to do a 90-year, 100-year ephemeris, you might have to do this 2 or 3 times. But once you've put in all your data, you just click on Start down here, and it will give you a list like this, and you can then go and export that. You click on Export when it's finished. And you can export that into an Excel spreadsheet. It will look something like this, and voila, there you go. You've got the position of Jupiter in degrees between 0 and 360 degrees for 30 years in that spreadsheet. Now you start working with it, and you start looking at the distances that Jupiter has traveled between planets. Because this is a geocentric ephemeris, you can also look at things like when Jupiter went stationary, when it retrograded, and things around there, and the market action there. If you want to do some more work on that, go back to the channel, go to playlists, which you can see at the top here, and go to guidance for GAN researchers playlist. And I've got a recommended reading book for GAN researchers if you want to read some stuff on astrology and things to do with it. There's some a recommended reading list there. You've got GAN's reading list. You can start with some of Safarial's astrology books. It's not a bad place to start if you're a beginner in this stuff. But there's a place to go for your recommended research. You can't just open it up and look at the planets if you've got zero background. You won't be able to see too much. Sometimes, though, that's a good thing. You just put the degrees on there. You will see some things if you get the right planet and if you get the right geo or heliocentric, depending on the planet and the market and the cycle. So there's a lot of testing to be done there. Again, there are shortcuts to all of this, and GAN coded them in his book, The Tunnel Through the Air. I've recorded an audiobook of that for you. It goes for about 12 hours. Actually, it goes for 687 minutes, would you believe, which is the number of days in the Mars orbit. Nothing to do with GAN. That's just the speed that I read the book at. But that's about 687 minutes, so a bit under 12 hours there. GAN coded it all in there, but think about how valuable this information is. Just have a look at the basic cycle I've given you on the Australian dollar and the dates coming in and calling those turns. It's valuable stuff. So GAN's not just going to give it to you for free. You have to put in the time and the energy and the effort in order to crack that. Or you can pay people a fortune to buy from them and hope that they know what they're talking about. And I can tell you from experience, most don't. So I've been down that path, and I bought a lot of courses over the years, and a lot of them are either in the bin or they haven't been open for decades, 10, 15 years. That's all for the video, a little bit longer than I had intended, but I hope you found some value out of it. Thank you for watching. You can subscribe and turn notifications on if you'd like to keep up with the latest analysis and updates. I generally post the Aussie Dollar Insights, or the plan is, every Sunday at 7 p.m. I record them earlier on the weekend, but they do require some time for processing and editing and whatnot, so I just set the release time for 7 p.m. on Sundays. Thanks for watching. I wish you all the best with your trading. Have a great week, and bye for now.